Good evening, everyone. Welcome to the Loan Officer Training Series with the Mortgage Calculator. Today, we're going to be talking about how to structure a down payment assistance loan. Give us just a moment here to go live on all the different platforms. Go ahead and drop a comment there in the chat as you tune in. We got it up on the screen. Great topic here for tonight. Definitely a frequently asked question. A lot of loan officers wanting to know about down payment assistance programs and how to structure them and how they work. So it'll be a great topic here for tonight. And it looks like we're live on all the platforms, so we'll go ahead and get it started. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. You can also drop any questions you have in the chat, and we will go ahead and answer them after the presentation. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every Tuesday, Wednesday, and Thursday evening at 7 p.m. Eastern on the show is a loan officer training topic. And tonight's topic is going to be how to structure down payment assistance loans. So again, a lot of loan officers wanting to know about this. So it's a very popular request. Jose, I'll go ahead and turn it over to you so we can get into the presentation.
All right. Good evening, everybody. Thank you for joining us for tonight's training on down payment assistance loans. Now, please know what we're trying to establish here is the mindset for how to go about structuring your down payment assistance loans. There are multiple options. Some may have slightly different credit scores than what I'm talking about here. But what we're trying to establish here is the difference between the national down payment assistance options, which is what we offer, and the local and state options, which we do not offer because they are much more restrictive. So let's get right into it. How to structure a down payment assistance loan. So what exactly are we talking about when we refer to down payment assistance? What programs are we talking about? Well, we're talking about programs that assist borrowers with the required down payment and or closing costs associated with their home purchase. I say that because some of the options on these down payment assistance programs are for the closing costs only, and some are for the down payment. The main thing to note is that when they are specifically for the down payment, not only do they offer funds to the borrowers to assist, right, but those funds get directly put to the borrower's minimum cash contribution to the deal. So, for example, if it's an FHA loan, then you're looking at 3.5% of the sales price of the minimum funds contribution for the borrower, and the down payment assistance loan would meet that requirement. That doesn't mean that it's going to pay for the closing costs too. That's another component, but the borrower doesn't have to come up with the minimum 3.5% out of their own pocket, because you could negotiate the seller to pay the closing costs, for example, and have a true cashless transaction. But the main thing to note here is the difference between the locally based option and the national option. Now, the locally based option is usually going to be funded by a city, county, or state government. This option requires the MLO and the company, the originating MLO and the company, both be approved to offer that particular program. It also requires the borrower to be approved to participate in the program as well, usually having to be a first-time home buyer and having to meet certain maximum income requirements, right? There is going to be a threshold. Now, these locally based programs can be combined with FHA, USDA, and first-time home buyer conventional loans. And like I mentioned, they're usually going to have maximum income limits. And also, one of the reasons why it makes it difficult for companies that are a national company to participate in the local programs is because these programs also restrict the compensation that can be charged by the company. And this is a big obstacle because all of the plans that a company has across the board has to match, right? So you just can't say for one type of loan, we're going to change it to less than what we make on the other types of loans. That would be discriminating. Now, the national option, which is the one that we participate in, does not require the MLO nor the company to be approved by the specific program, only that the company be approved by the investor or lender that is offering that program. No income limits, no restrictions. You have both repayable and forgivable options. Now, one thing to be very aware of on these down payment assistance loans is that when you are combining, let's say, an FHA loan or a USDA loan, which are the ones that we can combine with our national plans, be aware that some of these plans may require borrower paid pricing. They may not offer lender paid pricing. So you have to start looking at the par plus that's being offered on the rate sheet as your quote unquote lender paid component, being aware that the pricing is not one where the borrower may actually be taking a step backwards. And what do I mean by that is if you have a down payment assistance program to give the borrower 3.5% down payment assistance, but the program is costing 2.5 or 2.75 points, and that borrower could normally get an FHA loan at no points for much lower, you really have to see what is the benefit, because if they're getting 3.5% down payment assistance and they're paying 2.5% to get that down payment assistance, their net benefit is only 1 point at that, and then at that 1%. And then at that point, you're going to have to try to get some assistance from the seller for closing costs and all that kind of stuff. So make sure that the pricing makes sense. Now, for the one that we're offering, it does make sense. I was pricing out some stuff recently for down payment assistance in the lower to mid sevens, charging like 0.875 or 1 point. That definitely makes sense for a down payment assistance. So we have gotten much improved pricing lately. So what are some of the transaction details then for our national options? Well, again, purchases only can be combined with FHA or USDA loans. For USDA loans, it's the forgivable option only, because that's just the only one they offer. For USDA, it's the forgivable option only. USDA is already 100% financing. So typically there is not any down payment required. So that 3.5% could go towards the closing costs. Eligible borrowers are any borrower that's buying a primary residence, as FHA and USDA is for primary residences only. No first-time home buyer nor income restrictions ever on this national option, open to all U.S. citizens, permanent resident aliens, and non-permanent resident aliens. And be aware, non-permanent resident aliens, where they need to have a valid work authorization document. Very important, especially for the FHA loans. It can't just be that they're on an E2 visa, which gives authorization to work, but doesn't really give a work authorization document. They'd have to go, that would be a non-permanent resident alien who would have to then go with a conventional loan, which may not be possible. Is not possible, let's say, for the national DPA option that we offer. Now, eligible properties is pretty interesting, because not only are we able to do attached and detached single family residences, 1 unit, and PUDs, which are in an association, HOA, and a condo, but we can also originate this product with a 2-unit property, a duplex, and with a manufactured home. Be aware that there are loan level price adjustments when dealing with a 2-unit property or a manufactured home, but they are possible, and that would be the ultimate house hack if you get that duplex with DPA. Now, What are some of the details of our national forgivable option? Now, this is really the option borrowers are looking for when they're looking for down payment assistance. They want that quote unquote free money, right? It offers a borrower 3.5% of the sales price to be used towards the minimum funds contribution. I will note that there is also a 5% forgivable option. However, you have to try to get pricing on that one. It's hard to get compliant pricing on that one, which is why right now I only have the 3.5% one here. The 5% one would be possible if you had the seller paying closing costs, where then those closing costs, some of that could go directly to pay the loan discount fee for the option, so that then it could be used. Best part is that this forgivable option, the DPA, whether it's forgivable or repayable, does go towards the borrower's minimum funds contribution to the deal. Now, the forgivable does have a minimum 620 credit score versus a repayable 660 credit score. This one can be combined with FHA, USDA loans only. Now, very important about the forgivable nature of this loan: no interest accrues and no payment is ever due. Right? It is a second lien, right? So it is a second lien against a property, but again, no payment. It is forgivable after 5 years if you are current on the first mortgage, so after 60 payments. Now, this option does have a higher cost and rate than the repayable option, which would probably be the reason to select the repayable option. Typically, it's like 0.5% to 0.75%. In some cases, even a whole full 1% lower cost when comparing, lower rate when comparing the same cost between the forgivable and the repayable. Obviously, the forgivable having the higher of the two rates. So some borrowers may not qualify at that higher rate and may have to then go to the forgivable option to get the lower rate, right, for this, so that they can qualify and still use down payment assistance. This forgivable option and any of the DPA options can be combined with seller credit for a true no money needed down transaction. So if you get 3.5% of the purchase price DPA, then maybe you get 3 or 4% of the purchase price seller contribution, and you have a $350,000, $400,000 home. At 3.5 or 4% of that purchase price, you're going to get, or 3 or 4% of the purchase price, you're probably going to get most of your or all of your closing costs covered. And if you have that great realtor that can negotiate that amazing deal for you, you would be having a true no money down or no money needed, let's say, transaction. And again, this the property must remain owner occupied through the 60th payment to be forgiven. And as with all automated underwriting files, the DTA maximum is per AUS. If you do get a refer on your AUS that it does have to go to manual underwrite, then you're going to have to revert to manual underwrite DTI, which is definitely going to be lower than AUS. Now, our national repayable option is also available in 3.5 or 5% of the lower of the appraised value purchase price, as is always the case. No income nor first-time home buyer restrictions. The assistance is provided in the form of a second mortgage at a 9.99% interest rate, amortization in 30 years, but most important to note, a balloon payment due in 10 years. That means that after the 120th payment, which I believe would be 10 years, you got to pay whatever you owe at the time of. Now, hopefully the borrower will have refinanced out of these two loans into one loan, consolidated, got rid of the mortgage insurance. It's going to be a pretty good time now to do all these maneuvers as the rates are dropping. So it's probably not something that you usually would have to worry about, that balloon payment due in 10 years, but we definitely have to put it out there. Now, again, this does have a lower rate than the forgivable option, but a higher credit score. This can only be combined with FHA loans. You cannot combine the repayable option with USDA loans. And like the forgivable DPA option, the down payment assistance, whether it's 3.5% or 5%, can be used to meet the borrower's cash requirement of at least 3.5% of the purchase price. Neither of these DPA options are eligible for cash out refi, and DTI max again is per AUS. If you have manual underwriting, you have to revert to manual underwriting DTI. Now, our last option here is our repayable closing cost assistance. I want you to pay careful attention to the fact that this is closing cost assistance with up to 6% assistance possible. What I mean by its closing cost assistance means that the money that they're getting can only be applied to the closing costs. The borrower must have 3.5% of their own funds, 3.5% of the purchase price of their own funds to contribute to the deal. Hence the name closing cost assistance and not down payment assistance. It is also offered the same as the repayable option as a second mortgage at a 9.99% fixed rate, 30-year amortization with a balloon due in 10 years. Again, there are no income nor first-time home buyer restrictions. This is also a lower rate than the repayable option, than the forgivable option, just like the repayable option is lower. It's 3, 4, 5, and 6% is the amount of assistance needed. And just like the other option, DTI max is per AUS. No cash back. This is not for refinances. This is for purchases only. And just like the repayable option, minimum 660 credit score. Now, last but not least, I wanted to go over here, and I think that some of my stuff is getting cut off. Darn. Well, I wanted to show you how to properly set this up in the LOS, right? It's very important that if, for example, you're using Encompass, which is the most popular LOS, that you have the 1003 set up properly so that the gift or the, which is how the down payment assistance is considered, so that it's a gift from a government source. If you want this gift to be picked up as an asset, as down payment, it has to be properly set up. If it's not properly set up in the manner I'm going to explain now, DU findings is going to give you an error stating that you haven't met the minimum 3.5% funds contribution to the loan, assuming, let's say, it was a transaction you were putting together where you had down payment assistance and closing costs credit from the seller, where you have no money coming from the borrower. If you don't have the DPA properly set in the LOS, it's going to think that your borrower is not bringing any money to the table, and you're not going to get the approval. So you have to make sure that in page 4, section 4D of the application, that you have the gift section checked, that you have the amount of the gift. So we have a gift of cash. The gift is from a federal agency. The gift is for $15,750. And then when you click show all gifts or grants, it pops up the Fannie Mae additional data screen there. FHA, actually, no, it pops up the institution, the institution. And right there, you have to put PFA, as you see I have in yellow highlight there, PFA as the name of the institution. That's the required one for the system to pick up, depository institution PFA. And then also there's another screen there, which is Fannie Mae additional data, right? So that's another form in Encompass. So you have to click the Fannie Mae additional data form and then go to the part on gifts and make sure that you put FHA gift source government assistance, right? So FHA gift source government assistance in the Fannie Mae additional data form. And in section 4D, that you select federal agency, put the amount of the gift, and then click show all gifts or grants and put in PFA. This way, as a depository institutions, that this way when you run automated underwriting, it'll pick up the gift as a cash contribution from the borrower, even though it's because it's down payment assistance, not a regular gift. If it was just a regular gift, not a gift of cash from a federal agency and not from PFA, then the system would not give that gift amount as down payment that the borrower is making. So real important. Had a couple people in the last week come into my Zoom support room with exactly this error, and this is what I had to help them with so that automated underwriting would pick up the gift as down payment. So make sure you have this set up and make sure you understand the differences between the national DPA, the local DPA, and pay special care to the pricing. Make sure that it's not being priced so expensively that the DPA would not make any sense. Now, the options that I've quoted you here today all will make sense to the borrower, especially now the repayable option is like in the low sevens, almost at par. I think it was like in the low, like 7.125, charging like a quarter point for repayable down payment assistance, which is amazing.
All right, we got a question, but it's about a construction loan. So I think we'll save that for our construction loan video and a printed screenshot of the programs. All the programs are available if you just look in the Knowledge Center there. If you're on our team, if you're not on our team, obviously you'd have to check with the lender about the programs that you're referring to. So I don't think any questions about the down payment assistance here. So we can go ahead and wrap it up. We will be back next week on Tuesday with another loan